Hi, I'm Peter Rose, founder of Longwood Currency Trading. Understanding the 3 Forex rules of the game is the topic I want to discuss with you, and I am compelled to discuss this because I've had several emails, more than several, in the last couple of weeks with people looking for help in trading Forex, and they have no clue as to the basic premise of the Forex market or why they're doing it. All they're doing is because some fool riding around in a Lambo with his ball cap on backwards making $1 million a year has been harking about how he made all his money in the Forex market. He can show you how to trade the Forex market and brush your teeth at the same time. It's unfortunate, but you wouldn't drive a car unless you understood how to drive. You wouldn't go jump in the pool unless you understood how to swim. You wouldn't pick up a guitar unless you understood the basic fundamentals of music. Why is it any different in Forex? People think they're getting an education about the Forex market by having we're on a windy day here. it's the end of June, pushing the end of June of 2025, and we're expecting a big rainstorm later today. We're actually the first day of summer, and so it's windy, and my notes, because I wanted to have notes for this, my notes are blowing all over the place, and I'm trying to drink my coffee. French press today. I had to go out and walk Bodog because Sue is off with our granddaughter. They're going park hunting, hopping today from one kid exercise park to another around the area, and so they're gone. So I had to walk the bow, come back, take a shower, and while I'm doing that, I got the French press going. I'm looking at the market. I don't want to do anything. It's Friday, so the thrust of all that is to add to my frustration about folks that think they're going to be able to replace their job income and buy a Lambo without understanding any fundamentals. All they want is the secret sauce. For those of you who have written me, and I've aggravated you, and so you don't write me back, the reason that you're aggravated at me is because I told you the way it was. I'm not going to lie to you. I'm not going to bullshit you. I have nothing to sell you. I have a course and consulting programs, but I do not sell them. People come to me and they say, hey, you look like you know what you're doing. I'd like to take your course. And they buy consulting from me, but I don't sell it. And so I have no fear of saying to somebody, this is the way it is. And they don't want to hear that. And so they get pissed off. I've taught martial arts, karate, self-defense for, well, I'm going on 57 years now. I've got students that have been with me 40, 50 years. Not that they need self-defense help, but it's a process of belief and being a continuing member of a process. So when you're dealing with important stuff like that, you have to be right. And you have to be dogmatic. What am I going to do? Have somebody come into my karate club and I'm trying to show them how to do a up block followed by a punch, and they're going to argue with me, or they're going to debate the force vector analysis or whatever the crap it is that they think that my old Uncle Billy that used to be a street fighter, he says this is what you ought to do. Great. This is how you do this move. This is why you do it. This is how to get better at it. There's no deviation from that. And so that's my honesty, and I'm respected for that, and I have helped people in their lives have better lives, not only through the self-defense, but also the process of martial arts itself and the training that we have. And this is what I'm trying to do as an educator in the currency market. Unfortunately, some of the folks out there that are looking for currency education are not realistic or rational the same way that somebody who would come to me as a martial artist and looking for martial arts instruction from somebody who knows what they're doing. Do I have all the answers and everything? No. Are there people that are better at things than I am? Absolutely. But the skill that I have is that I understand the educational process. And I understand how to build structures that follow that educational process, because if it doesn't follow an educational process, then it isn't simple. The way I teach martial arts is simple. The way I teach currency trading is simple. When I was working as a software engineer for 33 years, I had people come to me and say, hey, I'd like to be a software engineer. What do I need to do? Okay, this is what you need to do. And I broke it down for them, and it was simple. And when I outlaid the whole thing for them, most of them said, I'm not really interested in doing that. And that was a good thing, because they would have invested years learning a skill that they didn't really like. And God knows, and I worked with people that didn't enjoy their job. I loved software engineering and solving complex problems. And so my presentation is geared for somebody who's serious, somebody who has some basic information, and they're ready to map that basic information along with who they are into a educationally sound process in the currency market. And that involves understanding the 3 FOREX rules of the game. The FOREX market is not a game. It's not shits and grins. It's dead serious. You're putting your money and your family's money on the line at risk. And if you screw it up, you screw your life up. That's why people would rather put their money in index funds or I don't know why, the stock market, but whatever, because those are safer investments. Well, they're not safe. You can have a 30% drawdown in the stock market in a heartbeat. You can have the last real estate collapse that we had, the town that I lived in, 35% of the condo market depreciation. Single family homes, 30%. Stock market down, whatever. So there's risk in the currency market as there's risk in everything else. I can't control I spent 40 years investing in real estate, and I couldn't control my risk, because you can't buy a piece of property and fix it up and then go, oh God, all my tenants are leaving. What do I do? Oh, the roof leaks. You know what? I'll just get out of this building, take a quick loss, and then I'll go on and buy another one. Because you may not be able to get out of that building at all. The general market for a small 4-unit apartment building, even in the best of times, was 3 months, 6 months. You want to go 200 days on market? I've been through economic collapses like that. I've lost $1 million twice in my life due to economic collapse and not being able to get out of the real estate market. But I wouldn't want to get out of the real estate market because I understood the rules of the game. And therefore, I was able to make the $1 million back each time. It took me 10 years each time, but I made it back. And I retired over $1 million net worth because of that knowledge and following the rules of the real estate game. And the rules of the real estate game are different than the rules of commodities or currencies or selling old tires or whatever it is you want to do. Having a fashion blog. The rules of the game. You have to know the rules of the game. And so the rules of the FOREX game, and we call it a game because there's a thing in mathematics called game theory. It's applied to dice, but it's more decision making in decision heavy weighted processes. Monte Carlo simulations are based on game theory, okay? So a game is anything where there is risk of loss involved, but skills to be developed that can mitigate that risk. That's the definition of a game. And therefore, the Forex market, the stock market, commodity market, the used cars, old tires, starting a fashion business, those are all risk. With good knowledge, you can mitigate the risk. These are all games. The Forex market is a game. And very quickly, I'm 10 minutes into this, and I'm not going to beat around the bush in case you're bored. Here are the 3 rules of the game of understanding the Forex market. First is order flow. Second, broker is not ECN, and you have to deal with the spread. Those are the 3 rules of the game in Forex, and I'm going to spend the rest of this video talking about those rules. But if you have no interest in education, you can go on and watch Mr. Beast, because this is it. Order flow, broker not ECN, and the spread. So what's order flow? Order flow are the institutional traders that are 95% of the volume of the $6.7 trillion a day market. The institutional traders are taking orders from their clients saying, I have $4 billion worth of engine parts that I need to sell my currency and buy another country's currency so I can buy those $3 billion worth of engine parts. That's what causes, that's the order flow. The client is putting an order in to the institutional trader who executes that order. The retail traders aren't carrying anything in this game. I'm going to move this down. It is aggravating. The wind is blowing. The institutional traders are 95% of that $6.7 trillion market. The retail traders are an afterthought. When I started looking at the currency market, it was $3.4 trillion a day, and the retail market was about 15% of that. It's $6.7 trillion a day in market. The retail trader is not keeping up with that. So the retail trading, us, is about 5% of that market. So 95% of the volume is controlled by the institutional traders. And they trade differently than we trade as retail traders. This video is not about that, but that is a critical factor in understanding the order flow of the Forex world currency market at $6.7 freaking trillion a day. You must understand the concepts behind order flow. And then there's all the stuff on how you do that. That's what you need to do. I'm not going to tell you how to do it in this video or we'd be here for 2 hours. That's part of the coursework that I have, is going deep dives in each one of these, and there are other ones, but these are the major rules of the game. You get into the rules of trading. This is just the rules of the game. It's like chess. You have rules of the game, but then you got rules of play. This is not complex or difficult stuff, but you have to know how to break it down into consumable pieces of solvable problem. So order flow is the #1 rule of the game that you must understand. The second rule of the game is that the broker is not an ECN broker. The institutional traders are ECN. They deal directly with each other, and they actually are the ones that are transacting the money that the client is putting up to make the transactions. The broker is not. The broker takes the other side of your trade, and at the end of the day, flushes all that stuff out into the interbank market, because there's enough there that the interbank market will pay attention to, and they can say, oh, I got $400,000 of pound dollar to buy. Okay. The ECN institutional broker will listen to that. You're just another client of the the broker is another client of the institutional trader, institutional market. Well, what do you mean, Peter, that the broker takes the other side of your trade? In other words, if you buy pound dollar, the broker is going to sell it to you. Why would they do that? Because your little diddly 2 mini lots or 40 full lots, taking $400,000, or if you're 500 to 1, 10,000, but we're talking about real trading here, not bullshit that the Lambo crowd's trying to talk to you about. Talking about real money here and how to deal with it. All the people that trade at a brokerage, I mean, how much money do you think a broker is going to have? They're going to have 1,000 or 2,000 clients or something like that. And you add, of the 2,000 clients that they have, 20 of them are going to be trading 6-figure accounts. Maybe more, but it doesn't make any difference. They're not trading $4 billion a day, you know, because there's a lot of brokers out there. So they have to take the other side of your trade. However, the experienced traders, the A group, because there's an A and a B group, they're going to clip the broker because they're going to be right, which means if I put a 20 lot order into the broker at $200 a pip and I make 100 pips, that's a lot of money. And if the broker took the other side of that, it costs him. So he doesn't want to be holding my trade until the end of the day. So the A group, because we're larger, they trade those out right away, or they take a hedge bet against that trade, like the oil company will hedge your yearly oil contract that you buy for your heat. They're not buying the oil as you get your tank filled up. They've already bought the oil for the year. They've locked their price in with a futures contract. And now they just sell it to you. I'm sorry, but that's the way that it works. So your broker has no incentive for you to make any fucking money, because the more money you make, the broker is going to lose. So the broker is not your friend. You got to understand that. And you got to understand why the broker is not your friend. You got to understand why all the educational shit that the broker is providing for you is useless. It's good information, but it's not applicable to what you need to do. Because they would be burying themselves if everybody became profitable. They'd like the little traders to be profitable because it doesn't cost them that much, because they make their money on the third rule of the game, which is the spread. In poker, you'd call that the vig, the ante. So when you buy a position, you make a trade, you buy pound dollar, there's a commission that you have to pay for that. It might be 1 pip, it might be 2 pips, it might be 20 pips. It depends on the spread that the broker has. The spread is the difference between the bid and the ask, what you're going to buy it for or what you can sell it for. They know that sometime you're going to have to come in. If you're buying something, you're going to have to sell it. If you're selling it, you're going to have to buy it back. So when they say that that's why they're being forced to say what the spread is, not what the commission is. If they say, what's your commission? Oh, it's only a pip and a half. It's not a pip and a half. It's 3 pips, because you're paying a pip and a half going in and you're paying a pip and a half coming out. So they call that the spread. And you can see the spread on your broker platform. It says 1.7. That's is a 1.7 spread in pips. 1.7 pip difference between what you got to buy it at and what you got to sell it at. The fact that you say, oh, I'm going to buy this here and I want to make 5 pips, so you set your stop at 5 pips, means you're going to get your 5 pips, but that price is going to have to go 7 pips or 7.5 pips in order to pay for the spread. So when you're saying, oh, I'm hoping that my price goes 10 pips, how tough is it to go 10 pips? Well, yeah, but it's got to go 13 pips in order for you to be sure that you got it out. So how much more difficult is it for you to get 13 pips than it is to get 10? It's markedly more difficult. The more pips that you strive to gain, the cost of that spread is less. So if I'm gonna take a 5 pip profit, then it's going to cost me 8 pips. The price is going to have to go 8 pips in order for me to make 5. So that 3 pips as a function of the 5 that I made is astronomical. But if I was going to make 50 pips, then the 3 pip difference is minuscule against the spread and the actual value of the money that you make in the profit of the 50 pips, right? And so everybody is cautioning you, don't trade for 3 pips or 4 pips or 5 pips because the spread will eat you up. Yes, if you don't know what you're doing, you're exactly right. The spread will eat you up. If you get into a poker game, your ante will eat you up. It will clean you out. That's why in professional poker, when you get to the latter rounds in the game, the ante goes up and you have double antes going in. It's to force people to put money in and become invested into the pot so they have to play. And that's the danger of just saying, oh, I can make just 3 pips a day, I make 5 pips a day, because you're needing to make 8 pips or 6 pips or whatever to get your 3. To make 6 pips, you may have to profit 3 pips, you may have to make 6 pips to pay for the spread. So you're going to have to do that a lot. You're paying a tremendous amount in spread to the broker. So of course they want you to trade for 10 pips a day, 20 pips a day, because your chances of, with your experience, is minimal to make 10 or 20 pips a day. They're going to tell you, oh, it's safer to go out on the daily chart because then you're going to get 50 or 100 pips or 200. Your goal is to get 300 pips, and all you have to do is check it at the close every day. Yeah, and also they tell you that you got to have a 3-for-1 risk to reward ratio, which is the most stupid fucking thing I've heard in currency trading above all. If anybody talks to you about risk to reward ratio, they do not know what they're doing. They got lucky, they made their money, and they think it has to do with risk reward. Oh, if I want to make 30 pips, I have to take a 10 pip risk. If I want to make 300 pips, I've got to take a 100 pip risk. So as a beginner trader, you're supposed to be smart enough to trade on the daily charts to make 300 pips with a 100 pip loss. How many times do you think you're going to take that 100 pip loss? You're going to go to the wood on your account. That's what you're going to do. That's what the spread's all about. So the 3 rules of the Forex game are understanding, number 1, order flow. Number 2, your broker and his motivations. And number 3, the spread. Better know that stuff or you'll take your account to the wood. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.